This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, March 31st, 2015. Euro dollar. So the euro looks like it wants to put in another lower top in favor of a continuation of the current downtrend, with the market seen accelerating to the downside if we do break and close back below the 23rd of March low, which comes in around 107.68, 107.67. A break and close below this level would do a good job of confirming the possibility of this lower top and opening the door for a retest of the recent 13th of March 2015 and 12-year low down all the way at 104.62. However, inability to close below 107.67 on Tuesday would keep the correction intact and open the door for fresh upside, potentially back above the recent 1052 highs and towards the 111-112 area. Sterling dollar. So cable is now in the process of consolidating off recent multi-year lows at 46.35, with the market looking to put in a fresh lower top at 51.65 ahead of the next major downside extension below 46.35 and towards the 140 area further down. But at this point, any rally should be very well capped ahead of the 150 area, while only back above 51.65 would delay. Ultimately, a break above 55.50 would be required to completely shift the bearish structure. Dollar yen. So dollar yen continues to be very well supported on any form of a dip, with the market most recently being supported down towards the 118 area in the previous week. The latest bounce back above 120 encourages the possibility for a more immediate retest of the recent 122.03 multi-year high. A break above 122.03 would open the door for the next major upside extension towards the 125 psychological barrier. At this point, only a break back below the December low at 115.55 would compromise the highly constructive outlook for dollar yen. Euro Swiss. So Euro Swiss has been under pressure in recent trade, with the market down towards key support at 104.15. But while the market does hold above 104.15, there is risk for a higher low in favor of the fresh upside back above recent highs at 108.15 and towards the 110-112 area further up. Aussie dollar. So Aussie is back under pressure in recent trade after stalling out above 79, and the market remains locked within this well-defined downtrend, looking for the next downside extension below recent multi-year lows at 75.60. A break below 75.60 would confirm a lower top at 79.38 and open the door for the next major downside extension towards the major psychological barrier at 70. Dollar CAD. So dollar CAD has rebounded in recent trade after stalling ahead of that key support at 123.50, with the market looking like it's poised for a fresh upside extension beyond the recent 5-year peak at 128.35 and towards the 2009 peak at 130.65 further up. At this point, any setbacks should continue to be very well supported, with only a break below 23.50 to compromise the bullish outlook. Kiwi dollar. So Kiwi has been rolling back over in recent trade after stalling out just shy of 77, with the market now focused on a potential retest of the recent low at 71.76. A break below 71.76 would do a good job of accelerating declines down towards next key psychological barriers in this market at 65. At this point, really only a break back above 78.90 area would compromise the bearish outlook. SPX 500. So the S&P 500 is now back into the middle of a key range between 2120, which is the record high from February, and 2040, the March low. A break on either end will be required for clearer directional bias, with a push above 2120 to open a potential upside extension towards 2200, while a break back below 2040 would open an acceleration to the downside through 2000 and all the way down towards the 1980 area. Gold. So gold has recently broken back above 1200, with the market stalling just shy of that critical 2014 base at 1131. But the rally stalled shy of 1223, a key high from the 2nd of March. An inability to take out this level does keep the more immediate pressure on the downside for a potential retest of that 1131 low. At the same time, if the market can put in a higher low over the coming sessions and break back above 1223, it will do a good job of strengthening the prospect for a longer term base and for the market to trade even higher back towards the 1308 yearly high. That's all for now.